want to thank everyone for joining. My name is Shelly Panzarella with Prosperity Lending, and I wanted to share this great training tip on VA loans. Took a list of the top 10 things I think are important about VA loans as I've been doing this. I've been in the business for over 20 years, and I've seen some good and bad things about VA loans. And so these are the top 10 things that I love about VA loans and why I enjoy working with our veterans and our active military. So as I said, I really do want this this training to be very interactive. So if you have any questions, feel free to just jump in, and I'd be happy to answer them for you. If there's any clarification issues or concerns that you have as we go through these slides, please let me know. But my hope is today, after we're done with our training, you'll have more information about VA loans, how you can market them, as well as just a better understanding in how we work with our active military and veterans. So with that said, let me go ahead and get started. So the number one thing about VA loans is they are a no down payment program. Back in the days, they used to call it like a dollar down program, but it is truly 100% financing, so zero down payment. Our veterans or active military are required to come up with with their closing costs, but you'll see through the slides that you can also utilize seller contribution or different programs that would help to allow a borrower to come in with basically zero to closing. But specifically for VA loans, it is 100% financing. The new rule that has just come about as of 2020 is that there is no maximum loan amount. So really it's going to be based on our lenders. Typically, or for us here at Prosperity Lending, our max loan amount is going to be $2 million for a veteran. Before it used to follow the conforming loan limit. So prior to January of this year, our loan limit was $485,000, and so that was the max loan amount. You could do jumbo financing at that point, which would basically give you like a 25%. The down payment was going to be 25% of the difference from the conforming loan limit to whatever that sales price is. But today, based on 2020, if you have a buyer who's looking at a $600,000 purchase price, even though the conforming loan limits are $510,400, that our veteran can utilize their VA loan and purchase that home at 100% financing. So they could purchase that $600,000 home at zero down, which is pretty amazing. I know we've actually been able to help some of our clients, our veterans today utilize that, and it's been something that we've been, for us, up to $1 million, they're able to get in with no mortgage insurance, no down payment, and so it's been a great tool for, or benefit for them. And then moving along into the number 3 reason I love VA loans is they can actually have multiple VA loans. Actually, let me jump back to number 2. So this max loan amount of $2 million basically for Prosperity Lending, this is going to be based on 100% full entitlement. So knowing that our veterans can actually utilize more than one VA loan. So they can have more than one VA loan, and they can also purchase, they can own more than one VA loan, and they can also have had more than one VA loan. And so what I mean by that is there's a maximum entitlement amount. So typically it'll follow whatever that max conforming loan limit is today. So here in Nevada, it's $510,400. So if we had a borrower who, let's say he purchased a home by himself a few years ago, and let's say the purchase price was $200,000, he didn't want to sell that home, but he's now married, and him and his spouse would like to go and purchase another home, they ultimately would be able to take advantage of the zero down payment program using the difference, basically that $200,000 minus that $510,400. They could purchase a home at $310,400 using 100% financing. So still using their VA eligibility. And this, in essence, would provide them with 2 VA loans, right? The home that he purchased when he was single, and now he'll have this new VA loan now that he's married. And so this is the case where you'll see multiple VA loans. You'll see it a lot also when you have a when one of our clients is maybe relocated or was, relocating from a different station, and they're now coming here to, say, Nellis or such, and so they can take advantage of taking advantage of using their VA eligibility and still keeping the home in, let's say, Virginia as a rental and purchasing here as long as it's primary residence. Did you have a question, Doug?
I do.
Yeah.
So you said there was no max loan amount,
Mm-hmm.
but then you said there was a maximum entitlement amount.
Correct.
And so I'm curious, how do you determine someone's entitlement amount?
So the entitlement amount is going to be their full, as long as they have full entitlement, meaning they don't have any other loans. So in this example where I discussed the multiple VA loans, so that borrower had entitlement out at $200,000 originally. Now, had he sold the home right before we closed, he would have full entitlement and then would be open to no maximum loan amount. But because he wanted to keep his first home, that would basically hold him up for some portion of that entitlement. Does that make sense? So any borrower who is 100% no other loan would allow them to have 100% full entitlement.
Up to $2 million.
Yeah, whatever the lender's limit is. That's our loan limit. Some lenders are only like $1 million, but yeah.
So I'm so confused. Then why is he only entitled to 510 if it's up to 2 million?
Only because he has the other property that he's going to keep.
And if he were to get rid of that, then all of that entitlement stuff goes away and there is no such thing as entitlement?
That is correct. Then he has his full entitlement back. But because he was going to keep that current home, he has a portion of his entitlement on that original.
Yeah, I'm sorry, Shelley. I must be thick.
That's okay.
The entitlement number comes from where?
The entitlement number comes from the amount that VA is holding on that property. So in the example where he owned one, he has his current home, he bought it as when he was single, right? And that loan balance is $200,000. So because he doesn't have full entitlement, there's a portion of that entitlement that is being used. And so in that example, the maximum amount that the VA will allow him to utilize is going to be up to the conforming loan limit, which today is $510,400.
But Shelley, if it's a primary residence, and I think, Doug, this is where we're getting confused. If he only has one VA loan, it's up to the $2 million max.
Correct.
They're saying, hey, that's probably your primary resident. Now, if his one home was over the conforming limit, say he bought that $600,000 home first time out the gate, he is not eligible for a second VA loan because it is over the conforming limit.
Correct. That is correct. Because he's already utilized the full entitlement.
Not just this. Yeah, go ahead, Doug.
Yeah, I mean, is it sort of like then it's a backwards grandfathering that he's kind of being held down because of that the other
property?
Okay.
Yeah.
So if he gets rid of that property, then there's no such thing as entitlement anymore. He can have up to $2 million loan into that.
Correct. They call that in full entitlement when he has no other encumbrances. So he would ultimately be able to do no maximum loan amount if he had no other loans that he had taken out from VA at the time that he wants to close.
So if you had
active loans or no other loans?
No active loans at the time he closes.
Okay, thank you.
Yeah. Yeah.
So if he was a VA flipper, basically, say he bought two houses at $200,000 each year, 0% because he wanted to flip them, he could do that.
So they both have to be primary residents, right? But the flipping rule would be tough.
In the email,
so
also included your phone number, so if it's easier for them to call,
I'm going to mute a couple of us here. Sorry, we have a little bit of feedback. Okay, so in the example of the gentleman who was single, right?
Yes,
if he decided that he wanted to purchase the home, and then, sorry, let me. You guys hear the feedback?
I understand. I know from personal experience that they're very, very quick with responding to emails. So hopefully you'll be.
Okay, sorry. So, let me jump back here. All these. So as far as the flipping rule, I mean, obviously for VA, they want to make sure that our veteran is purchasing it as their primary residence, right? So I guess you could say if the gentleman who purchased the home originally as a single man and then got married, and he decided that he wanted to renovate and convert the original home, he could purchase the new home because there's motivation for it to be an owner-occupied primary residence. But he can't go in and say, I'm going to occupy both of these properties and with the full intent of flipping them. Does that make sense? He could buy one, flip it, buy another, flip it, but ultimately he has to, these ones have to be done as primary residence or owner-occupied properties. Yeah, and Trish, your question was he could keep the other one as an investment. Absolutely, no issues on that. And that's truly what would happen in the case of the borrower who was single when he first purchased. That can become an investment, or he could sell it after, you know, but he could then purchase. The motivation that he's buying a new home with his family would make it a owner-occupied property for him. Christine, do you have any questions?
And the email address, please.
Okay, go ahead. Sorry, Cindy or Trish?
Yeah, one more question,
Yeah.
and I won't tie you up on this.
You're good.
If he had the other house and maybe his entitlement that he has left is maybe 200,000 or 300,000, that's it. Could he finance two financings because he wants the new house is maybe 700,000. Now he's only entitled to maybe another 300,000 with the VA. Can he split the loan?
What he would do is just like we used to do with our jumbo loans. So we would take that 700,000 and that $300,000, whatever his entitlement that he has. That difference is, we take the 25% difference on that, and that would be what his actual down payment would be to qualify him for VA financing. So that could actually be a case where he comes in with less money, right, than the jumbo financing, which is today about what, 10% down payment. So that would be basically the same way we used to do the jumbo financing before. So we take the 300,000 minus the 7, so 400,000, 25% of that is what we would use as their down payment. Does that make sense? Did that answer the question, Trish?
Sorry, I put my mute on. Yes, thank you.
Okay.
The
Perfect.
dog is barking.
No worries.
Thanks.
Cindy, did you have a question? No. Okay. So moving right along. Go ahead.
Sorry. Well, I understand everything. But maybe I missed it. But could the VA purchaser, could he purchase at one time 2 properties adding up to the 510-4?
He cannot. No, just
Okay.
keep in mind that the financing aspect of it, the occupancy has to be primary residence.
Okay.
So it's really hard for buyer right to come in and say both of these are going to be my primary residence. It's different if he lived in Virginia, owned that home as primary residence, and then is now being transferred here to Las Vegas, and then he's going to be purchasing here as primary residence. So in that case, that's where the example of him having 2 VA loans or multiple VA loans is acceptable.
Okay, great. Thank you.
Of course. All right. The other benefit to VA financing is that they have no mortgage insurance. So like FHA has the upfront mortgage insurance premium and their monthly, and then conventional, if you're putting less than 20% down, there's going to be mortgage insurance. But for VA financing, there is no mortgage insurance. And so one thing that I always remind everyone of is this actually will help your veterans with their purchasing power, right? If you consider mortgage insurance on average, let's say for FHA, based on the $345,000 max loan amount, that mortgage insurance is about $200. And so if you take the factor of, for every $50 in payment, it equates to $10,000 in sales price. A borrower, a veteran who doesn't have mortgage insurance, can basically afford about $40,000 more in sales price than a traditional FHA or conventional borrower. So that's one of the benefits of using their VA financing is obviously no mortgage insurance, but it's going to open up their purchasing power as well. Deja, did you have a question on that?
No, I did not. Not at the moment.
Okay, perfect. I just saw that you unmuted yourself, so.
Oh,
All right, so moving right along to our number 5 reasons why I love VA financing is that they have a flexible credit guideline. So post-COVID right now, there are some lenders who have raised their minimum FICO score requirements. And so, but truly for VA financing, their minimum credit score is a 580. When we were originally going through COVID, we actually Prosperity Lending raised their credit limits up to 660. They've recently brought them back down to 620. We actually can still do financing at 580. However, the interest rate and cost for the rates at that credit score is really going to be high. And so what we've done is try to work with our clients to improve their score to at least a 600 or a 620 so that they're getting a better interest rate. As far as like short sales, bankruptcies, and foreclosures, their VA is a little bit more forgiving as far as the bankruptcy. As far as the short sales. In the past, they're ultimately, there's no waiting limit or wait time for a short sale. And then if a borrower had a bankruptcy or foreclosure, they're only limiting that to 12 months. They do want to see that they've rebound with their credit, and so they want to see reestablished credit. But this is one of the other benefits with VA financing is that they are a lot more flexible with their underwriting guidelines, not only with their debt to income ratio, but as well as how they evaluate credit. Any questions on this? All right, moving on to number 6. So Tidewater. If you ever hear a lender say we've got Tidewater, what that means is the appraiser has basically notified the lender that they are unable to come up with value. So the unfortunate part to this is that we have no idea what the appraiser's value is. And so a lot of times, we'll send this out to the listing agent, the buyer's agent saying, hey, we've got Tidewater, send me some comps to support value. Their number one question is, well, what is the value that the appraiser is coming up with? Unfortunately, the appraiser gives us no indication. It could be $500 short, or it could be $5,000 short, and they still have to issue this statement called a Tidewater. The process, though, is actually pretty simple. So the appraiser will notify us, will notify obviously the buying agent and listing agent to let them know we are in Tidewater. And so we have 48 hours to produce comps. And I always tell my agents, the more the merrier. I don't care if it's 100 comps that you have out there to support the value, just get everything to me so that I can send it in to the appraiser. We've fortunately been very successful in getting these reconsiderations. I do want to say just most recently, we actually came in a little bit short, or the appraiser came in a little bit short. There was some concern around the information that the appraiser actually had on there. There was also some communication that they had shared with the seller at the time when they were doing the inspection. And so that prompted us to send the reconsideration directly to VA. We're actually still in that process today, waiting on the outcome for that reconsideration. But know that that is an acceptable practice. I had done this I want to say almost 4 years ago. It was with a new construction client. The appraisal came in $40,000 short. There were some issues as far as the information that they reviewed. We submitted we submitted the comps back to them. The appraiser came back and said no. But because of the service and the way that the appraiser evaluated some of the information, we sent it directly to VA. They came back 14 days later and they raised the sales price up, or they raised the value up $30,000. So it is something that can happen. It is not something that happens often, but it is definitely something that does happen. But my point to number 6 is, if you ever hear the statement Tidewater, know that it has to do with short value on any of your listings or on any of your buyer transactions. Any questions at all about this? All right, perfect. Number 7 would be the types of properties that are acceptable for VA financing. Trish, did you have a question? I saw that you're...
No, I'll save it to the very end. It was back with the 580 credit score. We'll
You're okay, we can go backwards, you're fine.
Just
don't forget.
know what kind of money would be, you think they'd have to come in at?
Money as far as?
Like you said, you could get them a loan at 580, but they would have to buy points?
The rate.
The rate.
Yeah. So to be very honest with you, our 580 credit scores, they're like 5 discount points. That's how unattractive they are to our investors today. And the rate is probably 4%, where the going rate for like your 640 borrower today is about 3.25 for a 640, or 3 to 3.25 without any discount points. So it is definitely, because of COVID, it is definitely a space that some investors are just not comfortable with. But we were seeing that even at 620 when we first started into like in March and April, that interest rate at 620 for a borrower with a credit score of 620, we even to offer them like a rate at 4% when the going rate was the 3.25 was going to cost 5 to, I think there was even one investor that was asking for 10%, 10 discount points, which we all know we basically just can't do the deal, right? Because it's going to be a high cost loan and such. So today I would say they're right around like 4 to 5% for the cost if you're in a 580 credit score, which is why we really loan amount. Loan amount.
Okay, I'm sorry. Yeah.
But it's 100% financing, so it's pretty much the same thing.
Yeah. It's like 20% down unless you had.
Yes. Yeah.
All right. Okay. Just good to know.
Yeah. No, great question. Okay, so the acceptable property type. So we will allow for financing again if it's their primary residence. They can do single family homes, townhomes, condominiums, manufactured homes. And I want to point out the 1 to 4 units. So as long as they are purchasing a multiplex and occupying one of the units, they can actually purchase that home. We can utilize some of the rents to offset the full mortgage. And so it is a case where I've heard people say, hey, you can purchase an VA investment home. This is the only example that I've ever seen where you are technically allowed to have investment properties, but it is because of the other, say, 2 to 3 units that they have on a multiplex. And again, you can use the rental income to help offset any of that mortgage payment for them. So I wanted to throw that out there. If you ever hear the statement of a VA investment property, it's either one that they owned previously and they've moved, like we talked about for the gentleman who had his home when he purchased as a single man and then now is married, and so he kept his original home, and that home is now an investment property. But also I wanted to share the condo. So in here there's a link to the condo to show you what the available condos are. Can you guys see this page here? So this link, and I'll share the presentation with you, but there is an actual site.
Kelly, all I'm seeing is the Zoom screen.
The Zoom. All right, let me pull that up. Thank you so much for letting me know.
You have 2 monitors probably?
I do, yeah. How about that?
Much better.
Yeah. All right, so this is the condo link for VA, and so you can easily go in here to see. I'm going to put in approved condos in Las Vegas, state of Nevada, just so we can see what's in here. Maybe. And then I'll hit submit. It pulls up. There's no condos in Vegas. That's not true.
Your name is in that box. I don't think
that's
so.
right. Yeah.
You don't own a condo? What?
I know. The Shelley Panzarella high rise. So we've got condos here in Las Vegas. So these are all of our approved condos. So there's 255, and I'll just go to the first one. The Affinity is the project in downtown Summerlin. Adagio, let's look at this one. Okay, so where you see here that it says HUD accepted, sometimes it'll say accepted without conditions. Here you go, accepted without conditions. Regardless of what you see, if it is on this approved list, that means that you're acceptable, you're okay to actually offer and honor any VA financing in your condo project. So I love to point this out to our listing agents as well, because if you have a condo project, you want to pull up the FHA as well as the VA list to see whether or not your project is on there. And they'll be different. So for VA financing, it's a little bit different than it is for FHA. There's actually more VA condos that are approved than there are FHA condos. The cool thing about this is for conventional financing, you typically have to get like the questionnaires, you have to pull like the insurance docs and all that fun stuff. If your project is listed on this approved list, you don't have to do anything. You don't have to get a condo search. You don't have to get the occupancy ratio, any of that stuff. This ultimately serves as that purpose. So it's a huge benefit if you, so say it again.
Where do we find this again? Is this on your prosperity? It's just the va.gov. I see.
Yeah, it is just the link.
I usually go to the other one, the FHA one.
Yeah.
The VA, LGYVA.gov. Good.
Yeah, so they're both separate.
Yeah.
Yeah, I will absolutely share the link with you guys. I'll send you the presentation, which inside the presentation, it has the link as well. But I can absolutely forward that to you. All right, so I'm going to go back to the presentation. Do you guys see that?
Indeed.
Okay, perfect. The one thing I left out was manufactured homes. So we do, VA allows for manufactured financing as long as that property, just like with FHA, is converted to real property. Any questions at all as far as the acceptable?
So no vacant land.
No land, no, not today. They do offer construction loans, but they do want you own the land. Great question. All right, moving on to number 8. So I wanted to share some of the lingo, so to speak, for any of our active military and veterans. So the COE is not a close of escrow date. For the COE for any of our veterans is going to be your certificate of eligibility. And this lets us know the full entitlement. So Doug, where you were saying, like, how do I know if our veteran has full entitlement? When we pull their certificate of eligibility, it would reference whether or not he has any entitlement out on a previous home, or even if he had purchased a home in the past and foreclosed on it, that actually would hold up their entitlement as well. So if there was any money owed because of that foreclosure, you would see that on their certificate of eligibility.
What if there's money owed for a short sale?
Same, short sale, even for, you won't see it for student loans, but when we pull CAVers, that would also hold up your certificate of eligibility. But yeah, short sale would be also part of that, foreclosure, short sale.
You say hold up, is that different than effect and the dollar amount, or would they not be able to get a certificate of eligibility if they've had a foreclosure?
For the foreclosure side of it, they ultimately would either have to pay off that, pay off the entitlement amount, or we have to do a calculation to see what would be remaining based on however much that foreclosure was, because it would ultimately be the amount of their loss, right? So if they foreclosed and the home was $175,000, they would have that as entitlement that's out. You know what I mean? And they'd have to take care of that entitlement.
So if let's say the bucket's 500, they foreclosed and it was a $200,000 house they foreclosed on, then they were only be entitled on this house to get 300.
You got it. Yes, that's it. Now, if they took care of that original entitlement, that gives them, again, that full entitlement, right? So then they can go all the way up to the $2 million because they don't have anything that they owe to VA at that point, if they took care of that original issue.
So even though it's foreclosed and it kind of goes away, it never really goes away if they want another loan.
If they want another VA loan. We wouldn't see it if they did conventional or FHA.
Oh, that's interesting.
Yeah, I have actually had a borrower who had a pretty high penalty, they owed the VA a lot off of a foreclosure, and it was many, many years ago. And so he forgot, right? And so when we pulled the certificate of eligibility, it was almost the same. It was more than the amount for him to put 10% down conventional. We didn't even look at it at that point. He just put 10% down. So it was actually, yeah, the only way he remembered was because we pulled his certificate of eligibility, but we basically pivoted and used a different program.
So when working with a VA client, why should they be able to pull their COE? Can I pull their COE, or do we ask you to pull it before I get in the car with them?
So if you have a borrower who is concerned about that, you can always ask one of your lenders to pull it. We'd be happy to pull it for you. Usually they can go on into their e-benefits as well and pull their certificate of eligibility if they want to. So I'm pretty sure it's just like them pulling their insurance benefit
Well, yeah, it's just like I don't want to get way down the
And
path.
their DD 214s and such, but they can. It's a good question to ask. Yeah.
Yeah, I don't want to get that all the way down the path. Oh yeah. Oh, and by the way, that foreclosure we had on that $500,000 house. Yeah.
Yeah, so that's usually the first thing when they say, we always ask the question if they've had a short sale or foreclosure in the last, for VAs, I just say ever, but if they've ever had a foreclosure or a short sale, when they indicate yes, like, oh, I owned a home and the bank, took it, I just left the home or whatever, they don't realize it was a foreclosure, and so then I'll pull their certificate of eligibility before we issue a pre-qual. But if you have that and you have a client who's telling you that, we'd be more than happy to pull that for you.
Okay, appreciate it.
Yeah, of course. So the LES statement, which is the leave earning statement, is ultimately like our pay stubs for those of us, who are earning W-2s or 1099s, and all of the information on there really is based off of like you'll see their housing, you'll see their stipends, you'll see any of their allotments, and you'll see obviously their base wages. So typically when you're talking to our veterans or active military, you say pay stub, they're like, well, I have a LES. That's one and the same in their eyes. The DD 214 would be somebody who has been discharged from active duty, and in order for them to qualify for VA financing, they had to have been honorably discharged, and that's usually referenced on their DD 214. Now, you can actually pull this information up as well, and I'll share that site for you. That is in their National Archives, as well as in their the e-benefits website that they have access to. The FF is called funding fee. So whether a borrower is using their loan for the very first time or they're using it for the second and plus, what they call subsequent times, there is going to be a funding fee. And that rate today for the first time use is 2.15%. So if you have a borrower who's doing 100% financing, most borrowers are going to be financing this funding fee inside of their loan. And so the loan amount will actually be higher than their sales price if they have a 2.15% funding fee that's being added on there. If it's their second time use, it would be 3.33%. But just know that, like, if you're going to the closing table or you're looking at the CD or you're looking at the estimated settlement statement, that loan amount, if they have a funding fee, that loan amount will be higher. There is a way for a veteran to have that funding fee waived, and that is by way of being more than 10% disabled. So usually as I'm doing my pre-qual with our borrowers, I'm finding out what their income source is. And so if they're saying, oh, I've received disability income, I always ask them what percentage of disability does a veteran presume them. And so they usually will say, 50, 100, 10%. Anything over 10%, you know that they're not going to have a funding fee. Any questions at all about that? Nope. All right. The next thing is going to be on the seller contribution. So for VA financing, the max seller contribution is 4%. Now the traditional would be for rate buy downs. We're seeing them to even pay off some of the funding fees. If I had a buyer who has some excess closing costs, they want to use it to pay down that 2.15% funding fee, they can do that. The prepayment on HOA, no issues in doing that. One thing we've actually been able to, that we've actually taken advantage of is we had a seller maximizing the 4% contribution. They actually paid off a couple of debts for the borrower in order for them to qualify. And that is included in the 4% seller contribution, but it was something that is very unusual to financing, because conventional and FHA financing, it is only for closing costs. But in this particular case, he had a collection account and a credit card that we had to get paid off in order for us to move forward with the loan. Any questions at all on that? All right. The non-allowable fees. I get a lot of questions on this as to, some sellers believe that it's too expensive for them to do a loan for, or for them to go in a contract with for VA financing, because there's the VA cannot, or the veteran cannot pay any closing costs. Well, the truth of the matter is there are acceptable closing costs. I do have a link for that as well, but there are also some non-allowable closing costs. Here in Las Vegas, fortunately, the closing costs, go to screen 2, are primarily the things that we have that we would consider customary, like your owner title policy is a customary seller side. your transfer tax as a customary seller side. I spoke with, you know, with COVID today, we've got notary fees. That is actually a non-allowable fee. But I spoke with Chicago Title. Valerie at Chicago Title said that they actually waive the notary fees for our veterans. So you typically don't have to worry about that. But usually the cost for a seller when it comes to VA financing, what I've seen is less than $1,000. And that usually is a portion of the escrow fee, which most title companies are reducing the escrow fees because it is a active military or veteran. The pest inspection, which is like $100, if that. The owner title policy and transfer tax would be a customary fee. And so outside of that, it's really like less than $500, right? Our escrow fee is maybe $500, termite, pest, again, $100. So I usually see our sellers really coming out of pocket or having to expense no more than $1,000, especially if they're participating with a title company like Chicago Title that will allow for, that will do some reduction on those fees. And so I have this also available for you if you want to have that ready and handy for you. But it is the non-allowable fee statement, and it is by Chicago Title. Any questions on this at all?
Yeah, I'm sorry, did I miss something? The escrow fees?
Yeah, your settlement and escrow fees, which are usually like about, you know, I mean, think depending on sales price, what, $400, you think? 300? Those are paid by seller. The settlement and closing fee. We actually, and for Prosperity Lending, we actually reduced our fee. Our normal lender fee is $14.95, and it's categorized as a underwriting, processing, and administrative fee. And for our veterans, we actually reduced that down to $1,000 and lump it in as their origination fee, so that it's an acceptable charge. Any questions on this? All right, so so those are my top 10 lists. I wanted to share with you a couple other things as far as the VA financing. So one thing is on the eligibility. So we spoke a lot about it obviously being primary residence, but for our active duty military, all we need to have is their 90 days on their, what they consider active duty. We'll need it, or if they're retired or discharged, we would just need their DD 214. For our reservists, they need to have 6 years and an honorable discharge. And usually what we use as a reference point for that is what they call the point system. And then you can actually, as a surviving spouse, you can purchase the home with your spouse, with their spouse's eligibility. And that is based on these terms here, where the veteran had passed away with a service-related disability or connection or death. And then also if they have 100% disability ratings today. So know that that was, or prior to their death. This is something that is open for whether you're active duty, retired, reservist, or a surviving spouse. Any questions at all about this?
Yes. So for the 100% disability, it has to be 100% for the spouse. Correct. Okay.
Correct. Yeah. Yeah, that was one of the specifics that I had actually found out as well in discussion with VA. Occupancy, we spoke a little bit about this. So it is their primary residence. And again, whether or not the intent is at the time that they close, right, that was their primary residence. A home could become their investment property if they're moving up, moving out of the state, or whatever the case may be. The loan must be done with a veteran and their spouse. So it cannot be done with a veteran and their significant other, or cousin or brother, or whatever the case may be. It has to be veteran and spouse. So even if they go and get married right before closing, which has happened as well, that is totally acceptable because they are now married. But the other case would be if they are two VA eligible borrowers. And so maybe girlfriend, boyfriend are purchasing together, both of them are eligible for VA financing. They can, because they're not married, utilize both of their eligibilities and entitlements to purchase that home. Any questions on that at all?
If one is eligible, but they are a couple, they could have it titled in just the name of the one eligible person?
You would have it just in the eligible, yes, client. Okay. And then, only, unless they got married.
Okay.
Yeah. All right, proof of service doc. So as you're talking to your clients, these are some things that you want to ask them if they have. If they don't, it is definitely something that we can also request. For active duty, it's going to be their statement of service, or if they're retired, it would be their DD 214. For our reservists, they actually go into the e-benefits and pull their point statement, and that would be a way that we would know whether or not they've got enough time under their belt to purchase as VA or eligibility, and also their certificate of discharge. And then for National Guard, it's called the NGB Form 22. So those are just some lingo, I guess you can say, as you're talking to your active, well, I guess in this particular case, active military or your veterans, as to what documentation they have or need in order to prove that they can move forward. But really, the certificate of eligibility, which is easy for us to pull, is something that we can pull for them. Any questions at all about this? All right, down payment assistance. So I know we talk a lot about the Home is Possible, and through the Home is Possible, there is the Heroes program. Let me share with you what this looks like. So a couple things that this will allow. It's going to be either 100% finance. It will be 100% financing up to the $510,000. So basically the conforming loan limit. Minimum credit score for our Hero program is 640. They do have to do the home buyer cert, which every Nevada housing program does. When I looked at the rates today, let me see if I can pull this up for us. The rates for your 100% financing is going to be 2.75, which is a below market rate. And then you could also utilize the down payment assistance options, which would be your 2 to 5% assistance, which would help with their closing costs. So I've had a borrower who didn't get seller contribution. They actually took advantage of the 4% assistance that helped them to pay for their closing cost, and we also rolled in their funding fee as well. So their loan amount was the sales price. They got to come in with, they got their earnest money back basically because the down payment assistance program took advantage of the closing costs, either closing costs and funding fee in full. And if you haven't already gotten yourself certified and have gotten access to this as an agent, this is something you can easily do as well, as sign yourself up. I would say I receive on average 1 lead a quarter, which this is free, right? There's no, all you got to do is input the information. You can also show that you can take a quick class and it'll get you certified, but it's one opportunity to get your name out here because buyers are looking at this site here. And so this link will be attached and you can easily go in here and sign up for that as an agent. Any questions at all about that?
So I would think that teacher VA is your golden opportunity. 2.75, no PMI, 7,500 for closing costs, and 0% down.
Correct. Yeah, that is a perfect candidate if you have that. Okay. Yes. Yeah, and that is eligible. So Tricia was mentioning the through Nevada Housing, they have a teacher program, but if you're also a veteran, you get the low rate plus the $7,500 teacher bonus. And of course, there's no down payment. So that $7,500 can go towards the closing costs, funding fee, HOA payments, whatever it may be, debt, whatever it is that you need to utilize that for.
Oh, even debt. Okay, that's interesting.
Your VA financing, you can use seller contribution to pay off debt. It's part of their closing costs. It'll be part
seller contribution, but could you use that HIP 7,500?
You can, yeah.
Oh, wow. Okay, I learned. That's something I learned. Thank you.
You got it, yeah. Deja, did you have a question?
Yes. So back to the Heroes program, you said that they can pay their down payment for the Hero program. Is there a set amount? Is it 2 to 5% or is it the 7,500?
So the 7,500 is specific to the teacher program. And so they have to be a Clark County School District full-time teacher and be able to utilize their VA loan. So they'd have to be, well, in this case, a veteran. So it'd be a VA loan. And so they get the teacher program plus the 100% financing. The VA loan is 100% financing, so there is no down payment. So,
but for the closing costs, you mentioned the closing costs can be paid for.
Yeah, so just like we have it for FHA and conventional, it's that same sliding scale, right? The 2 to 5% just
Mhm.
depends on what rate you want for them. And they can utilize that for closing costs. So rather than having a seller contribute, you can actually utilize the down payment assistance program for the closing costs.
Okay, so I can use the HIP and the HEROES to get the interest rate lower.
No, so the home is possible through the HEROES program. The
Mhm.
HEROES program is just the below market interest rate, so it's 2.75. Actually, let me pull up. The actual down payment assistance program. Can you guys see the rates right now?
No, not yet.
Okay, let me pull this one. Okay, how about now? Can you
Okay.
see the rates?
Mm-hmm.
Okay, so the HERO program is right here, so 2.75. This is 100% financing, whether the buyer or the seller, they would have to pay their closing costs, right? This is
Mhm.
just the below market interest rate. The teacher program is that same below market interest rate, but they get the $7,500. So if your teacher is also eligible for VA financing, or so they're a veteran, they can take advantage of the 2.75 100% financing because they're using their VA loan and take $7,500 towards their closing cost. And then for your first time home buyers, there's the home is possible features. You can either use a 2.875% rate and they'll get 2% assistance, or 3.625 interest rate and they'll get 4% assistance. But because their loan is 100% financing, there's no down payment. They're solely using that 2 or 4% towards their closing costs. Does that make sense?
That makes sense.
Okay, perfect. All right. Last but not least is the tax exemption. So here in Nevada, our veterans, whether they're disabled or not, have access to exemptions here in the county. And so in speaking to a couple of our veterans, they are actually getting more of a incentive. Can you guys see the screen?
Yes, yes.
Okay. So they get a little bit more of an incentive by using it for their car insurance or car registration, but they can also get it towards their property taxes. And so this is a pretty, really all they have to do is complete this form, and whether they are surviving spouse, veterans, disabled veterans, complete this form and send this off to the county assessor. All the information is in here.
Shelley, I was curious about that because, yeah, another veteran told me he was using it for his car insurance. Registration, and I know it's a lot out here. But what I just thought that blew my mind because I thought, oh my God, property tax would probably you'd get.
Higher.
Is it just a percentage? I couldn't understand that.
It is, yeah. So you'll see here, it's a factor of their disability as well as their amount, right? So depending on their car, depending on their home, and depending on how much their disability is.
Yeah, non-disabled veteran I'm talking about.
Oh, so that's going to just be based off of the percentage of the car or the home. But I've noticed that as well, that they're getting more of, and it's a bigger discount for them basically by using the registration on the car.
Oh, interesting.
Yeah.
Okay. Thank you.
Yeah, of course. So I always point this out because whether they're looking to get qualified to buy a home, or you already, you know anybody, this is something that I think people forget about or don't realize is available to them if they're Nevada residents here. So this link again is attached in this presentation, which I will send out to you. But I want to make sure that we point this out. The other thing I always tell everybody is, I always ask the question of, are you eligible for VA financing? I personally have made that mistake in not asking and assuming, and it wasn't until, because the buyer was a civilian working, he had been discharged from active duty for years, didn't get any disability, and I went forward with financing on FHA, and it was one comment he made that made me ask the question after we had already gotten into, we had the appraisal back and everything, and this is, this has been my biggest learning experience in knowing that I ask this of everybody, but he made a comment about his past and where he was, 10 years ago or whatever. And it prompted me to ask the question of, were you in the military? And he said, yeah, I was in the military, I served for 4 years. And so it like quickly obviously flipped, but it was also for me a huge learning experience because it is something that I think a lot of us forget to ask, whether it is that they are or aren't. And so I've added that into my whole pre-qual process because you just never know. Some people don't, they're not open about it. I automatically know usually when somebody calls me ma'am, I normally say the next question is, were you in the military at some point? Yeah. And so they're usually say, yes, ma'am. But in this particular example with this gentleman, he obviously had been out of the military for a little while. And so I share that with you because it's truly just, sometimes it's one of those things that you don't remember or you forget. And if I had closed on that loan, I would have been forever indebted to him because that to me was a true disservice to a borrower who 100% was eligible and closed as VA financing. So that if I leave you with anything, that would be that. Always figure out a way to add that into your scripting or spiel or whatever you want to call it in asking our clients or customers if they have eligibility, if they know anybody who has eligibility for VA financing. Because believe it or not, even those that are active military, they have no idea that they have access to this amazing program. So that is all I have, and it is 1 o'clock. So if you guys have any questions for me, I'd be happy to take them from you. Otherwise, I want to just thank you all for attending and participating. Do you have a question, Doug?
I was going to, I'm attempting to get more contact information about you and the folks. I only made it to one sales meeting before we got shut down. And
Okay.
of course, I lost the sheet of paper with all that contact information on it. So would you mind shooting that to me?
Of course.
Drop my email in the chat session, or I'm friends on Facebook, I think, however. But
yeah, if you'll send me drop your email in chat and I'll go ahead and email the presentation deck as well as our contact roster.
Okay, I'll do that right now.
All right. Well, thank you all for joining this training. If you hopefully you thought it was beneficial and this will help you to do more loans for VA borrowers.
Thank you.
Thank you. Have a great
Thanks,
day.
Shelley.